Now, another month, another rate freeze. The Bank of Korea is standing pat on rates for the 8th straight month. The decision comes amid mixed economic signals at home and the Federal Reserve signal that US rates will be going up sooner rather than later. Shin Se-min with the details.
Policymakers at Korea's central bank decided on Thursday to hold the key rate steady at 1.25%. It's the 8th straight month the rate has remained at the record low after the Bank of Korea lowered it by a quarter percentage point in June last year. Bank of Korea Governor Lee Ju-yeol said the current rate is accommodative enough to support the Korean economy that seems to be sustaining moderate growth on the back of a steady global economic recovery. The decision comes against a backdrop of recent economic figures that have been sending mixed signs. Korea's consumer price growth reached 2% in January, logging the fastest pace of growth since 2012, while consumer sentiment sits at a near 8-year low. Exports have been on an upward trend for the past 3 straight months as of January. The decision was widely expected by analysts who said the Bank of Korea wants to avoid encouraging more household debt growth, which is edging toward a total of $1.2 trillion. The decision to freeze the rate comes despite the Federal Reserve saying in minutes released yesterday that it may be appropriate to raise U.S. rates again fairly soon. There seems to be growing belief among local policymakers that Korean markets are stable enough to ride out a potential capital outflow if the Fed hikes rates again. Shin Se-min, Arirang News.